I would welcome Jim Powers to the microphone. Good evening, Jim. And Jim is, I'll let you introduce yourself, but you are the independent outside auditor for the city of Quincy. Is that an accurate intro?
That's
and a good guy.
Okay. Well, thank you, Brad and councilors. I'm here tonight just to give a brief overview of last year's audit. And obviously, we're planning this year's audit as we go forward. Obviously, we're not going to go through the detailed audit itself, but from an overview standpoint, we didn't have, and when we go through and we audit not only the year-end numbers, but we also take a look at the activity and the reports that are produced during the year, and we test those as we go forward. We found that the system of internal controls in place is sufficient to make sure that you are getting accurate reports not only at year-end, but also during the year. So if you're going through a deliberative process of where you are at this point in time, say making budget decisions, you can accurately rely on the reports of where you are this year as you go through them. A couple of things that we do audit. We audit is a report called the Schedule of Federal Awards. And basically, it's a compliance audit that the federal government requires you to take a look at. If anybody that receives over $750,000 a year in federal awards, whether direct from them through the state or even the college got about $20 million worth of grants, and they're included as part of that. They have their own separate audit, but it's also included as part of the city's audit. That report, as we went through it, is what we call a clean report. We had no findings. The school does a great job on that, community development. All the people that take a look at it, we go through all kinds of compliance tests, and the report is as good as it can get. So that's kind of where we are there. As for the management letter, we go through and we take a look and make suggestions to the administration on things that need improvement as we go through. There's no what we call material weaknesses or significant deficiencies. Those are things that you really need to be concerned about. If you had material weaknesses or significant deficiencies, I wouldn't have made that earlier statement that said you can produce accurate, timely information during the year, because usually that directly results in bad internal controls not giving you information throughout the year that you can rely on. A couple of minor points that you get through, but one of the things that we need to work on is probably the biggest point in the letter this year is, and a couple of people already mentioned, the retirement system and the city's share of the liability for the pension system. The city and the college needs, and then the housing authority relies on the retirement system to produce that information that the city uses in their financial statements. And for the last couple of years, it's a new standard that's out there. The report from the retirement system has been really late, which causes the city, we could have been issuing this financial statement, our audit opinion, probably back in October, November, December, but we had to wait till the end of March before we got the information from them. And the management letter through the administration is requesting that the mayor, the president of the college, contact the retirement system to work out a way that you can get this information more timely, because it's a little dated because of this, but there's no options. And it's not the city's issue, it's the retirement system. All the other points in there, the city's working on is not that significant. The actual financial statements themselves, the city has, from a budgetary basis, about $5.5 million at the end of fiscal year 2016 in the general fund, another $10+ million in stabilization fund. That number is kind of low for a city this size. It's still maintaining some of your ratings as you go through that, but the city probably needs to think about building up those reserves because any type of emergency like happened a couple of years ago with snow and ice, we had that huge deficit that obviously eats into that particular amount. So from a planning standpoint, I think obviously budgeting your revenues conservatively as you go through, and that has a lot to do with coming up with a balanced budget and planning what you want to do. Obviously you can't replace all of those funds right away, but you have a $300 million budget. and you only have $15 million in reserve, and $10 million of that's in the stabilization fund. That's not a lot of reserves in comparison to other communities. I don't set policy, but in comparison to other communities, it's on the low side, so just think of that as you go through. And the water and sewer funds, the other two that are really budgeted as part of that, they're maintaining positive, certified retained earnings over there, and they're paying for their services without burdening the general fund. So that's kind of an overview of the financial statements. I know one of the things that Brad and I have talked about is the DIF fund, and if you want to get into any questions or discussions, I can give you a quick overview of that. The DIF fund for the development downtown, the city already maintains the correct accounting that in fiscal year 2016, there was about $2 million worth of tax revenues directly related to the DIF. That's calculated by the RKG as they go through, and Deb and Mark's people. That's required to pay any debt service on the bonds that are taken out for the project itself. In fiscal 16, the only thing that was being paid at that point in time was interest, and the interest rates are really low, which is great, but you paid about $500,000 worth of interest expense. And then from the standpoint of whether or not you want to keep a sinking fund for the DIF fund, for the payment of debt service, that's a policy decision that the city makes. You can either transfer any excess back to the general fund, which has been happening, or you could take a look at the long-term projections that you get. And basically, to simplify this, if the long-term projections of the revenues coming in, especially with the new parking garage, etc., are sufficient to meet the expected debt service, then it's an option that you can either return the money to the general fund and just keep paying for that debt service over those specific revenue accounts, or you could set up a sinking fund. But that's a policy decision that needs to be made relative to that. We don't set the policy, but the sinking fund itself is obviously an option as you go through. If you get to a point that the long-term projected amounts aren't sufficient to cover the debt service, you have to leave the money into the sinking fund. You don't have the option to bring it back into the general fund. And that's kind of where you are on that. If you have any questions on that, and also the chair, obviously.
Before we get into Q&A, just a little oversight on my part. I need to read into the record the open meeting law, Jim, which is pursuant to the open meeting law, any person may make an audio or video recording of this public meeting and may transmit the meeting through any medium. Attendees are therefore advised such recordings or transmissions are being made, whether perceived or unperceived by those present, and are deemed and acknowledged and so sorry to interrupt the momentum, but
I was going to say, it's not too late for you, Jim.
It's all good. But, you know, my point, and thank you again for coming, and we have had some, back and forth regarding that issue. I know some councils have brought that up prior to our resolution that I had introduced maybe a month or two ago, saying, let's take a look at this account. So I guess kind of before I go into my Q&A, I'd open it up to anyone if they had anything particular related to that. Okay. Yes, Council Finch.
Again, just for some perspective on this, Jim, when you first started, we actually did have some material findings that we noticed in terms of some strong systemic issues that have been in place for a very long time, particularly in terms of certain controls and the like. But what you're saying today is, again, because I can remember reading all of them at each session, but basically you're saying today we have a clean audit,
Right.
and that all of those specific things have been, in your professional opinion, addressed and changed.
Yes, I mean, it's a clean audit. Nothing's perfect. The suggestions were made for
Right.
efficiencies, difficult things to do. But the council, when we first started doing it, there were management level was pretty long and some extremely significant points in there that were considered significant deficiencies, material weaknesses, and it took years for those all to be cleaned out.
Right. Which you would list every year.
Yeah, it got smaller.
And progress and where we progressed and where we might have regressed. But the point is, those things have all been addressed at this point.
Yes.
The only other question I have, and this is more out of curiosity than anything else, but specifically in terms of the federal budget requirements, which I understand they can be quite, what's the word I'm looking for? Cumbersome, yeah, very, or really difficult and complicated. But I was just curious specifically, do those also reflect cases where we're paying personnel out of those federal
Yes.
funds?
Yes, there's a lot of school funds, a lot of grants that you get, special education.
And we're meeting all of like the time and effort pay sheets in terms of how that's reported?
Yes, what the different compliance requirements, and there's actually new rules this year called uniform guidance. So, but the school does a really good job on their grants and the compliance with that, and so the other departments.
They have to show, as I understand it, based even on their time and effort, linkage back to specific grants.
Right.
And that's all clean, they're doing a good job.
Yeah, again, nothing's perfect, but.
No, I understand that.
And the feds give you some room now that the materiality comes into play. You get $40 million worth of assistance, so we're not checking every $5,000 that moves through.
Right.
What we're looking at is primarily the system in place to make sure that you stay in compliance with the federal rules, and then test those, where we sample those and do specific tests on specific larger transactions as we go through. And then there are also some compliance requirements that go on that beyond just the accounting of this. Make sure that the reporting is correct.
Thank you, Mr. Chairman.
Thank you, Council Tim. Jim, just kind of dating back to that, you know, I think you call it sinking fund. Is that sort of the terminology for the DIF? So basically, the way that the financing set up, right, originally and into this day, was that the downtown revenues would meet and exceed any expectation that or obligation you would have to meet with the bonds that you put out in the market.
Right.
So what we're talking about, kind of what caught my interest here, is when we saw a report that was presented to us by RKG. I think it showed maybe a surplus revenue of, it was like $1.2 million, something along those lines.
Yeah.
So right now, as it's set up, and was initially set up, by the way, was that those excess revenues would essentially transfer themselves into the general fund, and at the time of free cash certification would become part of that process, correct?
Correct.
And then they're gone.
Well, they're just part of the general fund. They're not gone. They're there for the council and mayors to decide.
So essentially what we're talking about is a policy decision that would sort of isolate those funds within their own surplus revenue account inside of the DIF, so inside of downtown, right? And I think that
if you kept the surplus in there.
the questioning that you and I had is that, and this is just the way that my brain works, is like, worst case scenario, right? So worst case scenario, the revenues weren't fully self-supporting for the downtown. I don't see anything to show me that that's going to happen, but worst case scenario, the thought would be that this money would be tucked away in its own sinking fund or stabilization or whatever you wanted to call it to help offset the burden, or help meet the obligation that we're, as a city, required to meet to pay for that debt, correct?
It would be there as a sinking fund for that particular purpose until the decision was made to use it either for additional funding or as a cushion as you go through. But every dollar that you put in there is a dollar of free cash that you've done. I mean, that's just as, and so if you keep money aside for that, that will mean that to balance the budget, you might have to raise your rates, et cetera, because any reserve, any stabilization reserve, any type of reserve that you put aside will require, in effect, a vote to stabilization to increase taxes for that transfer to the stabilization fund, or if the policy is to build up that reserve, and that reserve was used to either increase the general fund balance, that will require, obviously,
But here's the
tax.
thing, correct?
Again, that's the policy.
Correct me if I'm wrong, provided that you continue to have a surplus
Right.
in this sinking fund that's located inside of the DIF,
Right.
you still have that transferability clause where you could take that money and use it if you needed to offset something in the general fund.
Correct. As long as
Provided that you continue to have a surplus. So I just kind of want to articulate that. That's, that's important to consider. And I guess my thought regarding the whole free cash perspective free cash is essentially, the breakage in your fiscal year budget, right?
Yeah, accumulated
Left
over all
over
the years,
money.
yeah.
Right? So it sort of varies. And no budget's spot on. You don't hit something spot. But the way I've always, seen free cash, it's almost like finding a $20 bill when you take your jeans out of the laundry. It's great to have, but I don't base my family's budgetary needs on my ability, to find free cash on my phone. So it's nice to have, but
Yeah, but I mean, what I said earlier, for finding that $20, because your system of internal controls around your accounting is pretty good, at any point in time, if you have an appropriation surplus, so if the department trends back $300,000, there's that $300,000 you found in your pocket, so you can review as you go through the year and kind of know every one of those dollars as you go through. Conversely, if someone's going to be over, like the snow and ice deficit, that's going to be a hit to your free cash. Once you go over, the same thing for your revenue projections. Once you hit last year's your budget amount for 17, any dollar in excess is free cash. Any dollar in deficit is a reduction of free cash. So it's...
I understand.
Yeah.
I guess the way that my mind was always sort of viewing it is that if the diff is its own separate entity, regardless of what happens in that account, I feel like it should almost be isolated in that account. And granted, I mean, I heard you talk about it, we've been paying interest. Right? So we've been rolling bands for, 10 years? And now I would assume that number is going to continue to drop as we start to begin to pay.
I expect that surplus to get smaller because you start paying down the principal piece. That's when the $2 million you can get in there is not just a $500,000, might be another $1 million worth of principal you have to pay down on that particular debt as you go through. So it's long-term projections to make sure that you're satisfied. But regardless of anything else, any shortfall in the diff still has to be paid by the general fund. So if the numbers, the projections end up being wrong, the general fund is going to
has to absorb it.
Absorb it. Part of the diff and part of the economic development that's expected is that the general fund is supposed to benefit from that too, especially if the growth that you see in the taxes and the value of the properties exceed what the expectations are. So you may be generating more money that can help reduce the taxes on everybody else in the city, not in that particular area. So it is not a number that's hard and fast. It is long-term projections with a lot of assumptions in there. So there's nothing perfect in that number.
Appreciate that. Any Councilor Forrest?
Thank you, Mr. Chairman. I just threw you to Jim. I just wanted to follow up. I had some questions on the sinking fund, and Councilor Crowell did a great job with that. What are you seeing other communities doing with their DIFs? Are they creating a separate fund, or are they rolling into the general fund? Because, at first thought you thought, Jesus, make sure downtown's caring for itself. But you're right. I mean, the residents out in the neighborhoods are saying, what about me? You're bringing this growth downtown, and that is a priority of ours, is to keep the taxes low for everybody.
Don't really see a lot of diffs up there. That's one of the things, some true diffs as you go through. And I'd say Quincy is probably one of the bigger ones and the true diffs. That they do happen out there.
Yeah.
Some of the ones that we may not audit, that might be other communities. But in talking with people, they kind of look at it as, all right, we've got to make sure that we maintain a positive cash flow throughout the project to make sure that the project, in effect, pays for itself. All the expenditures that the city made is garnering additional revenues to support all of that, so there's no net cost on any other citizen as you go through. But it's still the same tax rate, just because you live in the diff or you have a business in the diff, it's the same tax rate regardless. And so I don't see a lot of diff funds being built up, but they're a lot smaller in size and scope than Quincy is one of the largest ones that I've seen.
I think, particularly with road construction in downtown, seeing a lot of public needs. So, for example, the town plus liability, the town plus culverts, and things that are on our to-do list. What the financing options are for that. You had mentioned if long-term, so today the long-term project projections are sufficient, we're meeting and we're exceeding, $1.2 million surpluses referenced by Councilor Cole. What you talked about is if they weren't in that situation. And how far down the line are you, you're reforecasting this on an annual basis for us?
Well, yeah, you hire a professional company to come in and do that evaluation, but things change every year. You know, what's going to happen to this particular property? You're assuming it's going to be so large, maybe it ends up being bigger, maybe they downsize based on the economy. What's going to happen to the parking lot as you build that? What type of parking lot, what type of debt service do you have? What's the actual interest rates that you get on the debt? That'll have a big effect on that. So it's a long-term projection and refined as you go through this particular process.
And the municipal assets are incorporated into the value of the
Right.
Yeah. Okay, thank you.
Council, any further questions from Mr. Powers? All right, seeing none, thanks again, Jim, appreciate the time.
Thanks all.